Boston's #1.
Nice music, Prihat. Hello, everyone. Sorry, just get off of a meeting, so that's why I didn't like 10 minutes late. How are you, everyone? Hello.
Good. How are you, teacher?
Hi, how are you?
Good. Laura, I saw your email. I saw your email and I updated. What do you mean project for? Let me take a look.
Yeah, I already submitted the project for a while ago, and I was checking my grades, and you gave me F.
Project.
So I don't know what happened.
Let me see. Laura. Give me a second. Laura. Oh, Lara, not Layla. Okay, sorry. Just looking at Layla. Let's see. How much did you get, Laura, on that one?
Let me check here.
Yeah, can you send me a snapshot through my email? I will update it. Is it the only one that have issue?
Yeah, and the other thing was the capstone too. That is like I didn't got the point because it was late, but I dropped it on
yeah,
Wednesday.
That's fine. Because some of late submission I didn't get graded yet, but I will take care of that.
Oh, okay. Oh, so let me. Can I text you or?
No,
or
just send. So you go to Connect and you go to your score report. Just take a picture and send it to my email, and I will. You can do all of the projects. That way I can compare what I have on my end and I will update it for you.
All right. Perfect.
Okay. Yeah, I just sent
Thank
me your email. Rubaga too. Rubaga, I feel like you already finished project 4 and 5, right? But somehow from my end I don't see it.
Project 4 and 5?
Yeah, this you finish?
4 was a while ago. It was like a long time back.
Yeah, it's weird. From my end, some of your score didn't show. That's why.
Oh,
I,
okay. All right. I'll send you.
Yeah, just send a
snapshot.
snapshot. I will update it right away.
Okay.
Okay. Thank you. So everyone, Wednesday. So I will send you the link for Friday section first.
Okay, I already send you the
Okay, I saw it.
picture of the
Saw the
scores.
email. Okay, all set, Laura. So everyone, I already sent you the, if you go to your message, you should see the link that I tell you. I send you for the Friday section. So on Friday, just use that link to access. Sorry. Okay, everyone, let me take a look of your projects 4 because through my end, I only see a couple of you, couple of your score. So anyone, can you do send me a snapshot of your score and I will update it on Moodle for you, okay? So just take a picture of your score report and send to my email and I will update it. Four and 5, 6, 7.
Hi, Dio.
Hello, Suana.
Hi, how are you?
Good, how are you?
Good, thank you. No school next week?
Yeah, no school next week, unless you want to.
Oh, this never happened.
Yeah, so no school for the next week for Thanksgiving, and you have 2 weeks left.
Okay.
And that this semester, but make sure you have I will resend the you have Friday class, the last one, unfortunately, one more Friday.
This weekend is the last
week-
Friday.
Yeah, this week will be the last Friday.
Okay.
The last Friday.
And then we have 2 more regular schedule
Correct, yeah,
after Thanksgiving.
after Thanksgiving.
Okay. And today you're gonna start project 7?
Correct. Before start project 7, I will go over PowerPoint of chapter. We stopped at chapter 11 last time.
Yeah.
We will
Yeah.
continue. We have 12 and 13, but go 12 first, and then
Yeah.
start on project 7.
Okay. Sounds good.
Yeah.
Thank you.
Anyone do something far or on Thanksgiving, or no one travel, right?
No traveling, unfortunately.
Yeah,
This year different, right?
this year's different. Yeah.
Yeah. I'm
Maybe-
just having Thanksgiving with my host family.
Oh,
Yeah.
you have relative here?
No, I'm staying with host family.
Oh, okay.
Yeah.
Yeah.
To make sure that my mom will be fine. So you
Do you
need
have-
parents.
Yeah. So only you here, right? That's fine. This is-
Only me here, yes.
You have lots of siblings back home?
I'm an only child.
Really? So your mom
Yes.
leave you here? They
Yeah,
ask
I mean,
you to,
I'm with the host family, so she's very trust them.
yeah.
Yeah.
Friday. Okay, everyone, I just sent the message for the Zoom link on Friday. So on Friday, the main goal is clear out capstone 3. Okay, that's your last capstone also. Okay, so that's the Zoom link. Take care for Friday. Score. Okay, Vanina and Suwana, I will post your score. Okay, I will update your score.
Yes, thank you.
Yep, we'll email you when I'm done.
Do you mean Suwana S?
Suwana S, yeah, correct.
Okay, because you already did mine.
Yeah, I know.
Thank you.
Some projects, great, somehow, and I need tenant. Hello, Tiago.
Yes.
How are you?
All right.
All right, okay. In terms of your score, I guess because of late submission or somehow, can you do me a favor? Can you go to Connect?
Yes.
Okay, go to Connect and go to the score report. So the score report show on the score of your own project.
Okay.
Take a picture, send it to my email. I will update the score for you. Okay. So
Okay, I'll do that right away.
okay, thank you.
Thank you.
And because we only have 2 week left, so you don't have a lot of so you have to take all of your time, especially the one that behind which your projects.
Okay.
Okay.
I think I'm finishing project 5 right now. Actually, I just started project 6 actually.
Oh, that's good. So you're not behind anymore, huh?
Yeah.
How about capstone? Capstone, okay?
Yeah, actually, I will start doing that tonight as well.
Okay.
But I will be able to do at least 1 or 2 tonight. So
Okay. So
I should be fine.
when you start and you stuck with any question, email me.
Okay.
Okay.
All right. Thank you.
You can finish. Yeah. Georgette, how are you? Georgette? Where is she? So Laura outside, Vanina. Here. Okay, everyone. So let me update your score and Suwana has one is Vanina. So has Vanina. Okay, everyone, if you see any discrepancy between your score and the Connect, I mean your score on Moodle with your score on Connect, send me an email with your picture of your score and I will update it, okay? So now let we go through chapter 12.
Excuse me, teacher. Did you get my email?
No, not yet. I have one from what is that? I have one from Laura, one from Prihat, one from Vanita. No, I haven't seen yours yet.
Okay, I'll try again.
So most of you up to 6 already, right? Yeah, on my end, it only show Vanina's score for project 6. Only Vanina, Suwana P, and Albert, and Joanne. Only 4 score for project 6. It's weird. I don't know why. Some of you submitted, it didn't show here. Rubaga, I don't have your 4, 5, and 6. For sure you already did, right? But
Yeah.
from my end, it's so blank.
I'm just sending
weird.
the scores again.
Te vas a cabrear. Da igual. Ay, coño. Yeah, got it now, Rubaga.
Okay.
Okay, I will update it, okay? And I will email you when I'm done. Okay, so I will go through with you chapter 12 and 13 so that you have enough information to start with project 7. Most of project 7 will cover statement of cash flow, but I want to go through cash flow will be shown on chapter 13, but I will go through chapter 12 with you first. So on chapter 12, they will focus on how you recognize revenue and how you report the result of your operation. So you will see that the company name under Armour, is it a sportwear, right? Footwear and accessory for men and women. So its main business activity is developing, marketing and distribution of the brand apparel. one of the reason make their success is that they consistently have a good performance in terms of their sale, perform very well financially, get a good net sale and good earning at the end of the day. So when they look at the revenue trend 2015 and 2017, they show a net increase of revenue 22% between 2015 and 2016, 3% compared to 16 and 17. So the kind of the most important that when they talk about revenue is that when I supposed to be recognize the revenue. Okay. So revenue recognition is an important concept in financial or accounting reporting, because this is one of the top line when you deal with income statement, right? Always when your first income statement like sale revenue, and then you subtract out which on your expenses. So the general in principle is that the revenue is recognized when it's earned. If you remember, we went through two methods. One is cash basis, and the second is accrual basis. Under cash basis, you report your revenue when you receive cash, right? Under accrual basis, you record revenue when it earned. So the cash portion and the time that you record revenue, they are gap there, okay? Not at the same way if you do cash basis. So they this slide they tell you, okay, what is the revenue if you do as a driver. So the cash that you most of the time for driver, you will record it at under cash basis, right? Cash received from revenue transaction will be recognized in income statement. The same way, if you do a contract, there are another type that contract that you may deal with is called installment sale. So where you recognize sale or revenue per depends on the phase of the process. Same way, for example, you are a construction company, you build up a new building for a client, for example. You don't collect all of the money at once, right? Most of the time they have, okay, phase one, pay how much, phase two, pay how much. So at that time, the revenue is recognized differently. In determining what is the time or what is the correct amount of revenue, you should recognize a term that they use is performance obligation. So basically, you the general rule is that you're able to recognize revenue when you as a seller carry out or performs the obligation. Basically, when you transfer the good or the service to the client, you are allowed to recognize revenue. So example here, assume that you carry out a transaction total of 35,000, and when you sell a product, like some products, the warranties come with the products, right? So in this case, the extended warranty estimate at 5% of the total price. So when you sell the products, besides you sell a physical, for example, a physical item, you also include in that the warranty service. So here, they allocate out because the service, the warranty service will last for 3 years and 400 per year. So that's why they separate out the service 400 multiplied by 3 years is 1,200 per year. The extended 5% of the total price. So if you take 5% of this, would become 1,690. So end up at the end of the day, they allocate out what is the vehicle delivery, what is the warranty, and what is the service section. Total up will be 35,000. So they show you here an income statement. Okay, so you will start with sale, net sale. Net sale basically are sale after discount or after return. Okay, and then on the expensive, the bottom line in net income. So beside your normal main activity revenue, sometimes you have some gain or loss. It's not happen frequently, but it happens sometime in a period of time. Like for example, you sell a equipment that you no longer use, okay, and you create a gain or a loss on that, you have to report it too, okay. Or somehow you got a lawsuit from someone, you make that's your losses you have to report to. Or you have a storm that year in the town, it undergo a storm or a natural disaster, it creates a loss, for example. So you have to disclose, you have to report these losses on your financial statement. Restructuring charges. So you may have, it's not happened frequently, but maybe you have to pay the fee or a expense for a very good or a key employee to be relocated, or you have to pay a severance payment for the terminated worker. So these are charges, they are expensive that you also able to report on your income statement. Another term that you need to know is discontinued operation. So for example, your company have 3 sectors, okay, 3 sections. One of them doesn't perform very well. So you decide, okay, I have to shut it down. So it's considered as a discontinued operation, and you have to report it separately in the income statement. So discontinued operation will be shown on income statement separately, including how much you lost from that specific segment, what is the gain or the loss when you dispose that segment. And again, for the discontinued operation, you have to show them at net of tax. So basically, if they give you example here, but if you look at here, this is the discontinued operation section, okay? So it under the continuing operation. So here you will see operating loss on motel, net, you always see net of 90,000 income tax benefit. So basically this amount is the amount after tax. That's why it's the same way. So you can see the difference. If you on the top it continuing, right? It show as a cross, that means before tax. But for discontinue, you have to take care of the tax before you show it the number on your income statement. EPS, or sometimes you will see they abbreviate EPS. So EPS basically stands for earning per share. Earning per share basically tell you how much you earn for every single stock that you own, okay? You have the assignment to work on, to practice on the EPS calculation. Example here. Assume that a company has 80,000 shares of common stock outstanding during the first 9 months of the current year. So you see that you have from January to September, you have 80,000 shares, okay? And since October, the company issued 60,000 more. Okay, so 80 plus 60, you get 140,000 share from October until December. So they will ask you, in average, how many shares you owe over the year. So they use a method called weighted average to calculate the outstanding share of the year. So they will take 80,000 multiplied by 9 months divided by 12 because a year have 12 months. They have 60, and then during the last 3 months you have 140,000. So you take 140 multiplied by 3 divided by 12, you have 35. So in average, during the year, you have 95,000 shares. Okay. The formula for the EPS, earning per share, equal net income divided by outstanding number of shares. Outstanding share. So if your net income is 250 divided by 90,000, the amount that you just calculate out here, then you will get a 2.63 $2.63 per share. So on average, for every single stock that you own, you get $2.63. So as you know, we have preferred stock and common stock. So how do you calculate earning per share for preferred stock? So when you have, so in this example, they only calculate in the company that it only have common stock. So what if your company have both common stock and preferred stock? How do you calculate it? Always and always, because you know preferred stock have a reference over common stock. So before calculate the EPS, earning per share for common stock, you have to subtract out whatever dividend applicable for preferred stock. Okay, so here you have net income of 595, right? But because you have preferred stock, you have to take out the dividend supposed to be paid for preferred stock. So 12,000 multiplied by $6 per preferred stock. So the dividend applicable for preferred stock is 6 multiplied by 12,000, It's come up 72,000. Then the next step, you have to take net income minus whatever dividend for preferred stock. You will come up with the net income applicable for common stock. So in the last step will be the same. Okay, you take net income applicable for common stock, divide by the outstanding share, then you will come up with your EPS of common stock. Again, you have the assignment on project 7. So earning per share for the publicly owned corporation, they are required to disclose this information on the income statement. Okay. So right here, if the company have both continue and discontinue, you have to calculate. You have to calculate the earning per share of the common stock. And then earning per share that for both. Okay, so you have to calculate both EPS for income from continuing and discontinued operation. Okay, right here. So you see here, where is it? Your net income is 590. No, income from continuing operation is 805 minus whatever dividend for preferred stock, preferred dividend, divide by the number of common share outstanding. So that's how you get 3.67. And then you have to do another one, net income minus dividend for preferred stock, divide by 200 share outstanding. That's how you get 262. So whenever you have continue and discontinue, you have to do 2 calculations. 1 from income from continuing operation, and 2 from the net income. Basic and diluted earning per share. So the EPS that we just talked about, it's just about covering common share only. When you see the word in diluted means reduce the value. Okay. They will use the diluted EPS when they have preferred stock, when they have stock options and convertible bond. They don't require you to calculate diluted earning here, so we can skip that. Cash dividend. When you invest in a stock, let's say you buy 100 stock of Pfizer, for example, the one that have the vaccine, and because now they're in a very good spot, they issue a lot of dividend. Or when you invest in Dunkin' Donuts, for example, every month or end of the year, they give you dividend. So dividend is the amount of cash that investor get when they buy stock or they invest in a corporation. So there are 2 stock kind of two benefits that you can get when you invest in stock. One is cash dividend. Another is the chance that your stock increase in price. It's called stock appreciation. So when you deal with dividend, they have a couple items that you need to know. Number one is the day of declaration. On that day, the dividend is declared, and the person who declare will be the board of director. Okay. Another term that you need to know is ex-dividend date. So it is especially important for investor in a company who stock trade on stock exchange, stock market. They had date of record, usually 2 or 3 weeks, and it's stated in dividend declaration. And the last one is day of payment, where the real dividend paid to your bank account. So the day when the board of directors, they decide to issue or to give you $1 dividend per share that you owe, for example. So the day of declaration, the board of directors have to do 2 items. First, they have to declare the dividend, how much they're supposed to pay. And second, this is the time where they have to record the liability on the balance sheet. So if you see here, the company declared a cash dividend of $1 per share, and they have 125,000 shares outstanding. Okay, so that's why if you take 1 multiplied by 125,000, the dividend that they need to pay is 125,000. Dividend increase, right? Dividend payment increase. Dividend considered as they do the same way at, because they pay cash here. So that's why they debit cash dividend 125,000 and dividend payable 125,000. For the ex-dividend date, no entry need to be made. Day of record, again, no entry made. But when it's come to the day of payment, where the cash truly come out of the corporation, cash decrease credit and dividend payable decrease debit. So if you notice, only 2 days that you need to do entry. One is day of the declaration and 2 is day of payment. Example, I guess we will more focus. So if they give you this example, this multiple choice, they give you example that the board of directors on June 1st declare a dividend for 2,500 share of its $100 bar value 8% preferred stock. The dividend will be paid on July 15. What is the entry will be made on July 15? Okay. July 15 is the day that dividend will be made. So the answer should be decrease cash and decrease dividend payable. Based on this one we just talked, the day of payment. And the way they calculate the bar value 100 multiplied by 8%. So $8 dividend per share. You have 2,500 share multiplied it. So you got 20,000 dividend that you need to pay for this shareholder. Okay. Liquidating dividend occur when a corporation pay dividend that exceeds the balance in the retained earning account. And this only happens when the company go liquidated or making a permanent reduction in the size of its operation. Sorry, everyone. So the stock dividend is another term that you need to know. Stock dividend basically a distribution of additional share of stock to a company stockholder. So let's say you invest 100 stock in that a company, okay? When that company say, okay, I will give you, instead of cash dividend, I will give you 20 stock more. So now instead of I have 100, I have 120 stock in my bucket, okay? So that's another way that the corporation pay dividend to the investor. So you will ask, okay, what is the difference between cash dividend and stock dividend? Cash dividend, basically like its name, they will distribute cash to you, okay? Reduce both assets and stockholder equity on balance sheet. However, stock dividend, they don't distribute the real cash to you. They don't distribute the assets to you, and no change in terms of assets or liability or stockholder equity. So when its stockholder receive additional share when they have stock dividend, but his or her percentage of ownership is still the same. Example. Assume that a corporation that has 2,000 shares outstanding and owned equally by James and David. So basically every single one, James have 1,000 and Susan have 1,000, okay? The corporation declare a stock dividend of 10%. So 10% of 2,000 is 200, right? And everyone have 100 extra. So my beginning is 1,000. I get 100 more. So Davis and Mueller, each of them hold 1,100 share, but they still owe 50% of business. That's what they mean, okay? And because the corporation had not changed the size, had not changed inside, the total assets and liability and equity exactly the same compared to before they before they issue the stock dividend. So in accounting for relatively small stock dividend, the market value of the new share is transferred from retained earning account to the baked-in capital account. And this process is called capitalizing retained earning. Example. On June 1st, okay, this company has 100,000 shares. $5 bar value with a market value of 25 per share. Okay. On that day, the company declared 5% stock dividend distributable on July 15 to stockholder of record on June 20. The entry at June 1st to record the declaration of this dividend will be as follows. So what you need to know, I know when you deal with stock, you have to deal with a lot of, they give you a lot of info. You need to know which one you need to use. They say 5% stock dividend, okay? So 5% of 100,000 is how much? 5,000, right? $5,000. The bar value of the 5,000 is $5 per share, per common stock. So if you take 5 multiplied by 5, that will be 25,000. It's considered as you will credit stock dividend to be distributed, increase 25. However, that's the bar value. That's the face value. The market value is 25, right? Difference between 25 with 5 is 20. Multiply by 5,000. That's get you 100,000 of additional pay in capital. And the debit side of that is retained earnings. So when you declare that you will pay 5% stock dividend, your retained earnings will be reduced by 125,000. That 125 will be split between stock dividend to be distributed 25,000 and the additional pay in stock, pay in capital 100,000. So that's why if you look at back here, they say the market value of the new share is transferred from retained earnings to the pay in capital account. So you ask, okay, you had cash dividend and then you have stock dividend. So what is the point of, what is the difference? What is more attractive to instead in the eye of the investor? So for the management often feel that the stock dividend are more appealing, are more attractive because they allow the management to distribute something that have a perceived value to the stockholder instead of give them the cash. Okay, especially for the stock that just have high value, the stock dividend will be more attractive to the investor compared to cash dividend. Also, if the corporation needs to keep the cash to invest more, to do more, to buy more equipment, to introduce more product lines, if you don't pay cash dividend, you can restore that amount of cash to do something else instead of use that cash to issue cash dividend. In the standpoint of the investor, they also refer the stock dividend because they receive more share. Let's say you have 20 share from Uber, for example, and then Uber do very well and they issue a stock dividend, they give you two extra, for example, or 20 stock extra, you still refer that compared to cash dividend, because the chances that the Uber stock will going up, the value will much going up in the future, and you will be better off. Okay. And one thing that you need to remember is that stockholder refer stock dividend because they receive more share, and dividends is not subject to income tax until the share are sold. So that means if they issue the stock dividend to you, you don't need to declare tax on that until you until you sell the stock into the market. Stock split and stock dividend. When you say stock split, what that means is that it will be split. Okay, it will result into increase the amount of stock, but decrease the bar value of its share. Here, the statement of retained earning. Let's just try to show how retained earning look like. So you have a retained earning rollover from last year, 2020. Then you had net income of 2021, that together. And then during the year, you distribute dividend, cash dividend, 15,000 on preferred stock, on common stock, and then stock dividend. So total of them is 214. Take the subtotal minus dividend, you get the retained earning at the end of the year. Prior year adjustment. So sometimes you see on the retained earnings section, prior year adjustment. So basically, for example, you at an accountant, last year you do some error. You by mistake you have some error that you made in the book during last year. Okay. This year you notice that, okay, I made a mistake last year. How can I correct it? So whenever you do error, the spot that you show the change will be prior year periods adjustment account. So let's say example here. Assume that in 2021, the corporation discovered that it failed to record depreciation on certain assets in 2020. And after considering the income tax effect, the company found out that the net income reported were overstated by 35,000. So the beginning 2021, the retained earning account also overstated by 35,000, right? So the statement of retained earning in 2021 must include a adjustment or a correction of 35,000. Okay, so that's prior year adjustment. So if you look at here, that's how you adjust your retained earning if you realize that you make a mistake last year. So if you look at here, original stated is 750. You overstated, right? You overstated. So now you have to back that out, minus 35. So the new one, or the correct one, it's titled as restated, this number. The rest will just be the the same as we did on the previous slide. Comprehensive income. So you see that on your income statement, you have net income, right? Another term that you may see another account or another item you can see on the balance sheet called comprehensive income. So basically, comprehensive income is the total between net income and other comprehensive income. So they want to, on this slide, they show you the statement of stockholder equity. What is the balance? How many stock at first? What is the prior year adjustment? How much you issue? How much convert? Net income, dividend, and the balance. Treasury stock. You know, if you remember, Monday we talked about treasury stock. Treasury stock basically is the stock you issue already, but then the company or the corporation buy it back. So it's shown as a subtraction from the retained earning, okay? Because you don't report gain or loss on your own stock. Any question, everyone? No one?
Oh, good.
No, I go fast, right? But we when you go to the projects, then you will clear whatever we discussed now. The next chapter that I want to go with you is chapter 13. I would just focus on the one that you may need for your project. Have anyone started with project 7 yet?
Yes, I've like started.
No,
Yeah, I've started.
you started. How was it?
So I'm like stuck on question 2. I don't know like how to get the numbers because I know like what it goes where, but
That's
I'm like,
about cash flow of statement, right? Statement of cash flow.
yeah.
Yeah, that's
Statement.
why I try to run 2 chapters today, because so that you have some background of what you're supposed to report on your cash flow statement.
Mm.
Well, it's a long chapter, but I would just focus on the one that you need to know. So the last statement that you will deal with, because we already master, right? We already know about income statement. We all know about balance sheet, and the last kind of the last statement that you deal with is called statement of cash flow. So when they talk about statement of cash flow, one of the items that you need to remember is that there are three transactions, three categories that you will see on your statement of cash flow. So one from operating activity, one from investing, and one from financing. Okay. And the objective of cash flow statement is provide information about cash, whatever cash inflow, the cash comes in, or cash payment, cash comes out of your business. So you ask myself, what is the benefit of cash flow statement? What really people look at and what would really people looking for from the cash flow statement? So when they look at a cash flow statement from investor, from the creditor, from a government standpoint, they will see, okay, how much cash you able to generate, how much obligation, how many debt that you need to pay, what is the need of your, okay, because you are developing, your company may need a lot of cash to buy equipment, to hire people to do it, to do the job for them. They would have the need of external financing. And they can tell, okay, you tell me that your net income is 100,000, but what is your sale come from? What make up your revenue? Okay, is that make up from it's totally different story if your business get the revenue from your main activity compared to you get cash from selling the old equipment. Okay, so when you look at statement of cash flow, you will see different where the cash come from. The last 2 points is the non-cash aspect. Like for example, depreciation is considered as a non-cash aspect. Okay. The bottom line is that you will see, okay, how or why cash change, what comes in and comes out. So when you talk about operating, so whatever your main operating activity, this will be shown on operating activity portion. So cash receipt will be including the cash that you get paid from customer, the interest that you earn, dividend you earn, any other receipt, any other cash receipt that you receive during the year. This can be, okay, you win a lawsuit and you get $1 million. It still show on your cash receipt, okay? Or if you sell old equipment, you get 10,000. That's also listed under cash receipt. Versus cash payment is the opposite side, where, okay, you pay supplier, you pay bank loan, the interest for your bank loan, pay income taxes, any other expenses or expenditure from operation. So that's operating. Investing, when they talk about investing, so whenever you buy equipment, you buy assets, you buy vehicle, you buy land or building, the activity I consider as investing, okay, investing. Or even when you buy a franchise, it's also considered as an investment. So they will be included under investing category. Okay. When you, for example, you sell an old machine, the one that you cannot use anymore, or you want to sell it to buy the new one, that's cash flow show as cash receipt under investing activity. Or cash receipt from collecting principal amount on loan. So you have extra money you lend that amount to someone, and now you take the receipt, the principal back, that should show under investing. So one thing that you need to kind of remember is that interest dividend show under operating, okay? However, the principal is show under investing, okay? So that's one thing that you need to pay attention. Cash payment. So for example, you take $10,000 cash to buy a new vehicle for business. That should show under investing. The last part will be financing. So whenever they talk about financing, any activity related to debt and equity financing, it will show under financing section. Example, let's say you go to the bank, okay, and you say, okay, I would like to borrow $20,000 loan from you. That $20,000 show under financing, okay? So either proceed from short-term or long-term borrowing show here, or you issue stock, right? You get cash in, it should show here also. That because related to equity, okay? When you pay dividend, cash dividend, stock dividend, dividend in general, or when you purchase the treasury back, or you pay the principal, you see here, repayment of the amount borrowed, excluding interest payment, because the interest payment already show on the operating right here. That's one of the most confusing part when you deal with cash flow statement. Interest show on operating, principal show on financing. Okay, that's one thing that you need to remember. When they repay cash flow, there are two main methods that you deal with. One is direct method, okay, and the second is indirect method. Again, you can pick and choose whatever method that's easier for your corporation. Direct method, basically it starts from income statement. I mean, in order to read better cash flow, you need the info of income statement, comparative balance at the beginning and the end, and any changes during the period for a certain balance sheet account. So here, Allison Corporation, this is income statement, right? Net income, you have 65,000. This is the balance sheet account. So now your job is mix and match which one is active, which one is operating, which one is investing, which one is financing, okay? And that is exactly the product 7 asks you to do. So let's do some, let's do operator. If you look at here, you see we start with account receivable. So if account receivable means it's related to something that's sale, right? So in 2020, account receivable is 80,000, okay? 2021 is increased into 110. So basically, you sell more, right? You sell 30,000 more. That show on operating. Although you not collect them yet, but that's your that's your operating result. And so forth, okay? Inventory, short-term repay, and accrual. Again, we will go further on the assignment. Financing, financing, if you look through here, you will see that it will include the payment of principal, okay, the bond payable, and how many cash dividend that they pay during the year. Investing will be include how much planned assets that you buy during the year. So for cash receivable, in order to figure out the cash that you receive from customer, you have a net sale, and then you have to factor the change. Net sale come from income statement, right, everyone? However, you have to factor in the change from this account from balance sheet to figure out how much cash received from customer. So if you remember net sales, they start 900,000 and then the account receivable increased from 800,000 into 110. That's 30,000 plus, right? So you add, so you have to minus this one because when you sell a product, right? Either you will receive them in cash or in account receivable, right? So if they pay you in cash, your cash inflow will increase, okay? However, if you also sell them, but the customer say, okay, I promise to pay you later. Still the same amount of revenue. However, the cash you really receive in your raw decrease because you don't have cash now. You will have later, but for now, your cash flow is decreased. That's why you will minus if increase in account receivable, and you will add it if account receivable decrease. Because when your account receivable decrease, that means the customer already paid you step by step already. What I meant is that, for example, okay, so 2021, okay, your account receivable is 80,000. However, in 2020, your account receivable was 150. So if you compare these two numbers, you will see that, okay, my account receivable decreased. What that means is that the customer already paid some of my account receivable. They no longer owe me, they already pay me in cash. Okay, so that's why the equation here is that if account receivable increase, you have to subtract, but if it's decreased, then you have to add because it affects your cash flow. It's worked the same way with interest receivable, interest received. Okay. Cash pay for merchandise, it works opposite way in terms of, okay, if your inventory increase, that means, okay, you use the cash to pay for your inventory, right? So the cash payment for purchase increase. If account receivable increase, that means okay, you buy this the material from supplier. However, you don't pay cash yet. So that's why you have to subtract that out. Then it will make you cash payment for purchase of merchandise. Operating. So at the end, after you factor all of operating, this is how you record the cash flow from operating activity. So cash you receive from customer, the interest dividend you receive, and then that's the plus. The opposite is cash you pay to employee, the interest you pay, the income tax you pay. That's come out, right? This is comes in, cash inflow, cash outflow. So you take this minus this will be net cash flow from operating activity. And you do the same approach with the investing activity. So you see here, Allison, the company purchased the planned assets of 200,000, and then they use a portion instead of pay 200,000 in cash. They issue a debt, a long-term debt, 40,000. So that's why the real cash that they pay to acquire planned assets is only 160. Okay. So this 160 show under investing, and 40,000 show on financing. Okay. So that's why you see here they only show the cash comes out 160. For financing, you will report the items that related to debt and equity financing. Example, if you remember, we issue a where is it? Should be a debt from 40,000. The long-term debt 40,000. Can show here. Yeah, it should have something here that long-term receipt from long-term debt. So under financing activity, you see here we have receipt from short-term borrowing. Basically, you go to the bank, you borrow 45,000, they give you 45,000. That's your cash inflow. Okay. If you pay out dividend, the cash comes out. So that's why you need to subtract. Show as subtraction of 40,000. If you issue the capital stock, you get 50,000 in. That's why it's a positive. So all of these activities related to debt, long-term debt, short-term debt and equity will be shown on financing from cash flow from financing. So whatever you do after the end of the day, your cash, okay, your cash show on statement of cash flow must be tied to the cash balance on the balance sheet. Okay, you see here, the first assets appearing in the statement of financial position or balance sheet is cash and cash equivalent, and that will be tied to your statement of cash flow. If not, then you have to check again. That's something missing or something extra. So direct and indirect method. Direct method will provide the reader with the nature and the dollar amount of the cash inflow and outflow. First, the indirect method, they will begin from net income, and then they do adjustment. They will work backward from net income to cash flow. On the direct method, I mean, normally it will be easier to follow because you can see easily to calculate. The indirect, their starting point is from net income, and then you do a lot of adjustment to come. But at the end of the day, these two numbers, whatever you get from direct method, should be equal to your cash balance under indirect. Okay, so that is the check if your assignment correct or not. So that's an example of a direct method, okay? Direct method. So starting point, cash of operating activity, and then you have net cash from operating, okay? That's direct. Indirect, your starting point is net income. And then you adjust these non cash activity. And then at the end of the day, you also have net cash from operating. You see here, 50,000. If I move back here, you see it's under indirect, right? 50,000. If I look back here, I also get 50,000. So that's the way how you check your work. Furthermore, of indirect method. So you start with net income, you add up depreciation expense, decrease in account receivable, interest receivable, increase in account payable. One of the one of the way that you can make you easier, because you may ask, okay, how do I know which one I need to add? How do I know which one I need to subtract? One way to remember, or one way help you to do assignments, is that under indirect, your starting point is net income, right? Plus, you can write that equation to your books, to your notebook to use. Plus depreciation. So you will add decreases in current assets. Or minus increase in current assets. And then you add increase in current liability. And decrease, I mean subtract the decrease in current liability. So you you see here, accrue interest receivable. Accrue interest receivable is a liability. No, okay, hold on, increase. I'm sorry, no, accrue interest receivable should show as a current assets. So because a current asset, when it's decreased, you add it up. Account payable is a current liability, so the increase will be add up, and so forth. Okay, inventory and assets, right? So the increase will be subtract. So I will explain you further when you go into the assignment. Oh, okay. They give you a good summary here. You can use that too. That will be helpful when you do indirect operating activity and cash flow. Okay. This one only applicable for the operating section only. The financing and investing, you don't need to do this step. Okay, so you can use this one as a guide when you do assignment, but we'll go together. So I guess that's what you need to work on your assignment. Okay. So that's the last, I mean, the big picture overall of a cash flow statement. If you see here, they have the cash flow from operating, they have cash flow from investing, and the last one is they have cash flow from financing. So all of them together, it will call net increase or net decrease in cash. In this example, it's a net decrease because you take 280 plus 5 minus 290. That's why you have a net of minus 5. The cash starting point of January 1st is 50,000 because the change is minus 5. The ending will be 45,000. So this number, okay, this 45,000 should be equal. If you look at balance sheet, that should be equal your balance sheet, cash, and cash equivalent. Okay, if it's not matching, that means you missed one of the item from either operating or investing or financing. Any question, everyone? I know I go through not very detailed, but that will be easier to understand when you do the assignment. Anyone have question? Anyone? No one around? Anyone around? Already
Oh, good.
Here.
so let you take the break, and when you come back, we will go over together project 7. Okay. I received a couple email from you about the score. Just send in, and during the break or during today or tomorrow, I will update your score. Okay. I will
Okay.
email you, so you should know when I'm done, so you don't have to worry.
Thank you.
Okay. Yeah. Thank you. Okay, everyone, back yet? So we will start correcting projects 7, okay?
Okay.
Okay, so project 7, they will have 3 questions for you. So we do number 1. So a company called Slick Software, and they give you some number about this operation in 2021. Okay, so when I look through here, for continuing operation, they give you the net sale amount, the cost and expense. Other data, they give you operating income on segment of the business that the company discontinue. Okay, near the year end, and they give you the number net of income tax. So basically, 140,000 is the number, the operating income already after tax. Okay. Some loss on disposal of discontinued segment, again already net of tax. And as on our PowerPoint, when you report about discontinued segment, you always have to report it in the net amount, basically in the amount of after sale. Here they already give you that number, so you able to get these straight from here without adjustment about tax rate and tax amount. Prior year adjustment 350, and the cash dividend declare of 950. So A, rebate condensed income statement of 2021 include earning per share figure. Slick Software had 200,000 share of $1 par value on the common stock, and 80,000 share of 6.2500 per share for preferred stock. So what I can tell here is that, okay, they will ask me to calculate EPS, earning per share. And here the company have preferred stock and common stock also. So you have to make sure that you have to back out, you have to subtract dividend for preferred stock before you calculate for common stock. Okay. So let's go through number. Prepare condensed income statement. Okay, so we start with the income statement, and then you see here discontinue operation, and then a portion you are asked to calculate the earning per share. So we start with basic income statement first. Okay. So the first number I enter whenever you deal with income statement, again, sale minus expenses. So my first point is net sale. I have the number you get from here, okay? 19,850,000, okay? Cost and expenses. Cost and expensive right here. 16,900. Oh. $16,900. Okay. Oh, okay. I missed some line here. Continuing. operating. Okay. Gain from, let's see. So I have sale 19 million and cost is 16,900. So that will be my income from continuing operation. Okay. So 19 minus 16, that's why I have 2950. So you already take care of the continuing operation. Now, in the data here, they have some number related to discontinued operation. So you have to enter that too on your income statement. So you see discontinued operation, operating income during 2021. So you have to enter that in here. Operating income from discontinued operation. Add that, and you have the figure here, 140,000. And then they have a loss on disposal. So you have to enter that loss on disposal too. Loss on disposal, because it's a loss, so I hit negative 550,000. Okay. So this will be my income from operating income. I mean operating loss from discontinued, because it's a loss. How much, everyone? You take 140 minus 550, so you get 410 minus 410. Okay. So that will be your, I have continue, I have discontinue. So my total net income here is 2950 minus 410. That will be my net income. Okay. So the next part you need to do is calculate earnings per share. So if you remember when we do on slide earnings per share, because you have two portions, you have continuing operation and you have discontinued operation. You have to do two calculations. Okay. So first, you have to take income from operating, income from continuing operation, 29,000. I mean 2,950,000. You have to subtract out because they have common and they have referred stock. And whenever you have referred stock, you have to subtract the dividend of the referred stock. Okay. So in this case, I will minus how many okay, so preferred stock I have 80,000, 6.25 per share. I mean $6.25 per share. That will be how I calculate the referred dividend. Okay, so you will take 80,000. Then you multiply by 6.25. Okay. and then you divide by the common share that you have outstanding. In this case, they tell you 200,000. Okay, so I will divide by 200,000. So how much did you get, everyone?
That'll be 12.25.
2.25. Okay, 80. Yeah, you're correct. 80,000.
12.25.
Yep, 12.25, right? So 12.25. That my EPS, earning per share, based on the continuing operation. Okay, so you click on here. You will look for earning from continuing. Okay, because you take the amount from continuing, so that's why I click here. I will enter 12.25. Okay. And then there I also have to do another calculation similarly, but after discontinued operation. Okay, so instead of taking 29.50, I take 25.40. Okay, so another EPS equal 25.40. Again, minus, because you have to pack out, you have to subtract out the preferred stock dividend. And again, the amount of common stock still 200,000. So you equal how much, everyone? 10.20, right? Yeah, 10.20. Very good. So what I need to enter here is
Net earning.
I have to enter here loss from, oh, I'm sorry, earning from, earning from discontinued. Yeah, click on earning from discontinued, enter 10.20. I mean minus, it should be minus, right?
10.20. Wouldn't that be our net?
Oh, my bad. I'm sorry.
Yeah.
You're right. It will be my net earning. For this one, I just need to calculate loss from discontinued operation, right? And in this case, I take 450. I mean 410
Yeah.
divide by 200,000. So that's give me
2.05.
105. Yep. Good. So because it's a loss, so I need to enter at 2.05. So that's give me 10.20, which we just calculated here. Okay. So that's your require A.
So when you check the WEC, the part where we have loss from discontinued operations, for some reason, it keeps saying that one is wrong. I don't know if it's happening to everyone or it's just me.
You should enter loss from discontinued operation and put negative 2.05. Try that again.
No, the numbers are fine. I'm talking about the words, like the label.
The label, just label as loss from discontinued
no.
operation.
Not that one. The where we have the 410.
410. Oh, you mean operating loss from?
Yeah, I have the same thing, but every time I try to check my work, it says it's wrong.
So
I
why
don't-
don't you just take it off? Take off. Let's see what happened. Maybe they not
Yeah,
required.
mine too.
So
Mine is the same
I
Take
thing.
it
didn't
off.
write like
Take it
anything.
off. Yeah, take that one off. Is it okay now?
Yeah, maybe there's nothing supposed to be there.
Yeah. So I put it extra there. Yeah, take it down. It should be okay. Okay, so that will be condensed income statement. So question B. I clear this one now. B. They will ask you to prepare a statement of retained earnings for the year 2021 as originally reported. Retained earnings at December 31st, 2020, that amount 7,285,000. Okay, so this is your starting point. Okay, so you have your beginning. Okay, and then you have to add the net income of 2021 here. But here they also have some prior year adjustment that you have to factor it out, and then also have a cash dividend declared. So we have to also mention that in our statement too. So my starting point will be this amount. Okay, that's my starting point. So I will enter here as originally reported 7,285,110. Okay, and then you have a prior year adjustment. Okay, so you have to enter that in.
That'll be subtracted, right?
Increase. Let me see. Increase in 2020 depreciation net income. So basically, this adjustment will make the net income decrease. Okay, because when you increase the depreciation, right, that means your expenses increase, your net income will be decreased. That's why we need to put here last. So when last is strictly 350,000. 350. Okay, so if it's correct, this should be 69, but because they an error, they show it's at 72.85. So now you have to do adjustment to make sure it's correct. Then now the last part, you will just add the net income in here, right? The net income I got from the net income right here, this one. You have to take the one after continue and discontinue. Okay, so that's why I take 2,540 instead of 2,950. 2,540. 2,540. So it will come out at subtotal 9,475. Also, they have a cash dividend of 950. So you have to take that into account. So last dividend 950,000 minus. So that will give me a total net income. I'm sorry, total retained earning of 85,25,000. Okay. Everyone good?
Yeah.
So the letter C requires C. They ask you compute the amount of cash dividend per share of common stock declared by board of director. Assume no dividend in arrear on the referred stock. So basically they tell us that, okay, there is no dividend that declared but not issued, but not paid in 2021. Okay, so if you look at here, the cash dividend they declare is 950. That include for both. That include for both preferred stock, right? Preferred and common. Here they ask you only about common, so you have to subtract the referred stock, the dividend on referred stock portion out. Okay. So what you need to do here is you take 950. That's the cash dividend total were paid. Subtract the cash dividend that you pay for the preferred stock. So I have 80,000 preferred stock, right? And each is 6.25. So that will give me my common portion. And again, you have 200,000 common stocks. That's why you divide by 200,000. So that will bring you the cash dividend per share of common stock. So I know this amount is 900,000.
0.25.
You get, yeah, very good. 2.25. 2.25. That should be your answer, okay? Okay, so the last one on question 1, it requires D. Let me delete this one. They ask you, assume that 2021 EPS, earning per share, is a single figure and amount is $8. Okay, so they tell you that my EPS, earning per share, 2021 equal to $8 per share. Assume also there are no changes in outstanding common or preferred stock in 2022. Do you consider $8 earned per share figure in 2022 to be favorable or unfavorable figure in comparison with 2021 performance? Anyone have answer? So what they try to tell you is that assumingly that the EPS, earning per share, in 2022 is $8. So what you need to do is you have to compare $8 with your EPS in 2021. Okay, so I have to look back. I remember that I calculate here earning per share, $12.25, right? So it should be favorable or unfavorable. In 2021, you get 12.25. In 2022, 2022, you get only $8. So it's favorable or unfavorable? Unfavorable. Very good. Yep. So that will be your answer. Okay. Any question before we move on? Question 2, everyone. Anything that you want me to show again? I'll leave again for you to follow. No one?
No,
No.
it's fine.
Okay. Very good. I will move to. I will have to move to the next one. Just keep- So question 2. Okay. Question 2. A company called Lambert Company, they give you a bunch of account, a long list of cash sale, credit sale, account receivable, and so on. They ask you to prepare a statement of cash flow. You direct method. Okay. So your starting point under direct operating will be directly go into the cash flow. Versus under indirect, you need to start from net income. Okay, but here they just ask you to use the direct method. Okay, so you need to plug in line by line. So for references, okay, so you may ask, okay, how do I remember, or how should I put in here of the title? How should I remember which one is operating, which one investing, which one financing? One way that you can refer to is the ebooks, okay? In the ebooks, they will show you, if you click on ebooks, classification of cash flow. Here's a very good example of which one you should include in your operating, which one include in investing, which one you include in financing. Okay, so that is your starting point. So why don't we start one by one? So I will start with operating first. Okay, so operating, whatever related to my regular sale, regular operation, it will be entered here. What is the cash that I pay, I get in, and what is the cash I pay out under my main operating transaction? So let's look through. Cash sale, no. I look for something that cash receipt, okay? Cash you receive from the customer. Cash sale, credit sale, purchase, payment on. So let's start with number 1, cash received from customer. You have to do some math here. So cash sale, your sale will affect your cash flow, right? So that's the cash inflow. Credit sale, what is it? Collection. Credit sale basically you sell the products to them, but you cannot get the money, right? So they owe you that amount of money. So credit sale shouldn't be included on my, because you don't get cash when you do the credit sale, right? So it will not in my on my operating. Collection on account receivable. You sell, it used to be your account receivable, but the client pay you now. You're able to collect them. So that's the cash inflow. Okay. So the next one is cash transfer from money fund. That's not my cash inflow from operating. Interest and dividend. Yep, that's my cash inflow. Purchase, you purchase, so that should be cash come out. Okay, so my cash comes in. I look through loan collection, cash pay, no, book value loss on. So my cash received will be the cash that I got from sale plus the amount of money that I collected. 21.95. So that should give me the total of my cash received from customer. Two 2949. Zero, zero, zero. Okay. Cash received from customer 2949 000.
So I tried this, but it showed
It's wrong.
wrong.
Let me check. Okay. It's okay. Rubaga.
In my it was showing wrong.
Can you check on the number again or the description again? Cash received from customer.
Cash received. Yeah, just
Yeah, it's wrong. I checked and give the error.
It's wrong too. Really?
Yeah,
I think
unfortunately.
it's the same.
Are,
as-
the total? I mean the number they give you same with my number? Or different?
Mine is different.
It's different.
Oh, okay. Then just take whatever number you have plus take cash sale plus collection. Then it should be show the number here. Use the same concept, but oh, I didn't know that they give you different amount.
So with mine, I think everything is the same except the cash sales. Only my cash sales number is different.
Oh, okay. So they just tweak
They
the
change
number around. Yeah. So just do cash sale plus collection. That's give you the total here. Okay. Why don't you just try that and let me know it's okay or not?
Yep, all good now.
Okay. Yeah, so they just change the number a bit. Okay, so that's the cash come into your bucket. Okay. Another portion that will come in your bucket. So one way that you easier to follow is that you just cross out the one that you already included. That way you will not mess up or you do twice. Okay, so I drop these two out. I'm done with these two. Another cash account that you receive is interest and dividend. So I have interest and dividend is 100,000 here in my case. So I have enter here. Interest and dividend. Interest, dividend. receive. I have 100,000. Okay. So that will give me the rest is not cash inflow. So yeah, so at the end of this one, I will have cash provided by operating activity is 3049. Okay, your number may be different, but that is the concept. So I just taking care of the cash inflow of operating activity. Okay. Next step we need to do is the cash outflow, the cash that you pay out in your operating activity. So it will include that the cash you pay for the supply and the cap and the interest you pay, the income tax you pay. Okay. So for the cash paid to to the supplier, like purchase. See, you need to do some purchase. Payment. No purchase. Oh, okay, my bad. So if you purchase on account and you don't pay them yet, that means that's not the cash outflow. Cash payment for operating, this one, number one. And then the payment on account payable to merchandise supply. So these two should include on your account, your cash outflow. Okay, so I will take payment on account payable to merchandise supplier. I mean, again, your number may be different, but you can take the same line plus operating expense include payroll 1055000. So you will get 25 65 00. So I will enter here. Cash payment, cash paid to supplier and employee. And because it's come out, right? The cash come out from you. I will do a negative amount. Minus 2565. Okay. So whatever comes in, you put a positive, but it comes out, you put a negative. It's okay so far, everyone? Your number again different, right?
Yep.
But you just take supplier and take payroll together and add that up. That should be your answer. So beside you pay for supply, you pay for employee, one more item, a couple more item is you have to pay the interest, right? Interest pay. So now interest paid just right here, 180,000. So minus 180,000. and income tax pay. Okay, income tax pay 95. Income tax pay 95. So then I go through again any other that I need to pay. Okay, no. So that should be my cash outflow. So you should be cash used by, cash used for operating activity. Okay. So operating activity at the end of the day come in 3049, comes out 2840. My cash for operating at the end 209,000. Okay. So after you taking care of operating, now we move to investing and financing. But basically that how the cash flow works. So investing is when you buy equipment or you sell equipment. Okay. So, and then when you you give the loan to someone, or the amount of money that you get when you sell the assets. Okay, so that's the item we're looking for. So you have loan make to borrower. You can do that first. Loan make to borrower, because it loan you make you make loan to someone, that means the money come out. Okay, 500,000. What else? Cash paid to acquire planned assets. Okay, so that's it. The next one right here, minus 3,100,000. Okay. Oh, you collect some amount from the loan, excluding receipt of interest. Interest you already show on operating, so you don't include interest, but the principal, when you collect it back, you should report it to 60. So cash collection on loan 260, because it comes in, that's why I put the positive sign. Okay. Anything else? Book value, so loss on do I buy any assets?
It was a sale of assets.
Proceed from, oh yeah, no, hold on. Cash paid, book value of sold, loss on sale. Anything else? Did I miss oh yeah, I have the two number. I have something that book value of planned assets sold, and then another one is lost on sale of planned assets. So I have an asset, right? The book value at that time at the end of the year is 606. Okay. Then I have a loss when I sold it. If I take these two together, I will have the receipt, I mean the amount of money I get from selling this assets, okay? So proceed from sale of land assets will be 593,400. Yep, that should be it. That should be on related to investing, investing activity. So I should add here saying that net cash use, right? Because the total of investing in negative, that means the cash comes out greater than the cash come in. That's why I should use the phrase net cash use in investing activity. Okay. The last part that you need to enter will be for the financing activity. So financing activity will be the cash inflow and outflow related to bond issue, dividend pay, principal of long-term debt, and so forth. So I need to look for this kind of description. Okay, I had the proceed from issuing bond payable, dividend paid. Okay, so proceed basically just the amount of money that you get in when you sell something. Okay, here you issue bond, you get the cash in 2,500,000. And then you pay out dividend 120,000. Dividend paid, subtract okay, because the net of these two are positive, I should use the term net cash provided because you get more comes in than you pay out. Okay, so that will be your financing. So you already have the three elements of the cash flow. You have operating, you have investing, you have financing, and it's automatically calculate for you. What I need to do is just add the title. Net decrease, right, everyone, because it's a negative. Negative of this total. Minus 167,600. So the last step you need to do is cash and cash equivalent beginning of the year. They give you the number right here. January 1st, amount is 512. 512. So that will give me the cash and cash equivalent ending 344,400. Okay, I check my work and it's all correct. Any question, everyone? I know the number are different, but as long as you follow the step we did, you should be okay. Any question, everyone? No one?
The cash beginning of the year.
Uh-huh.
So let me see. Yeah.
Yeah, the cash beginning of the year. 512. I have 512.
Okay, I'm just taking a look in.
Should be the last item on your list.
Okay, okay.
Mhm.
Cash equivalent on January 1st. I got it. Yeah, I'm outside. Thank you.
Yep. Anyone else? No one. So the next one, we move to B1. Okay. So B1 just asks you the amount of collection from customer. Okay, you already did that. So basically you just need to enter in collection from customer. You see this one, 2949. And again, your number may be different, but you just need to take from cash received from customer. So in my case, I have 294930. Okay. B2, they ask about cash paid to supplier employee. You go back to Rec A, you look for it. Cash paid to supplier and employee. In my case, it's 2565. So 2565. And when the last one, receipt from sale of assets, from planned assets, look for here. Should be under here. 583,400. 583,400. So that's basically the hardest on Rec A, Rec B1, B2, B3. Just take the number from Rec A. Everyone good?
No, I'm not good.
Where are you?
Yes, that
What?
amount.
I'm sorry.
Yeah, I'm sorry.
No worries.
So yes, the amount 583. Mine, how did you get there? Because mine is not the same.
Yeah, yours is not the same, correct?
Yes,
So
and
what,
that amount on the first one is wrong.
you need to tag the book value minus the last. That will print you the amount on the Rec A. So I don't know how much in your number, your case, is it 666,100? The book value,
No,
how much?
it's 651 1,000. Yeah, 651,000
And how about the last?
is 82,300. Yes.
82,300?
Yes. So
Yeah, so you just take 651,000 minus 82. That's print you the answer.
okay, thank you. I'm gonna check this. 651 3 minus 82,300. Ok, 568 e 700.
Yeah, just change it and check.
568 600.
Good. You good, right?
Yes, I'm good. Thank you.
Yeah. So that's number 2. We move to the last one, okay? Any other question before we move on?
Mhm.
Anyone?
All good.
Okay, I'm good. Move to the next one. So in this one, they have two portions, okay? They will ask you to complete the statement of cash flow. And then they will ask you, one is from direct and another with indirect. So let's start with this one. First off, can you just check the number of mine is same with yours or different? Specifically the balance sheet account, the balance sheet amount, is it the same?
Yeah, the same.
Same, okay,
Yeah, mine is
very
the same.
good. And hopefully the top will be the same too, right?
Yeah,
Okay,
it
very
is
good.
the same.
Easier for you to follow. So the company's named Satellite World was founded 2020, applying new technology, cable television signal, and so on. The company earned a profit of 115 in 2020. That is the first year of operation. In 2021, it's increased, expand the customer base. So they hope that sale and net income will be around triple in the next 5 years. That's just more information now. Compare balance sheet as the year end 2020 and 21, the company's first 2 year operation. Notice that the balances at the end of the current year appear in the right hand column. And they give you more additional info. Net income of the year 2021 is 440. The company has never paid a dividend, so no dividend involved. Depreciation they give you here. The reason they give you because they will ask you to top up the cash flow by, in indirect way, because when you need to do indirect way, you need to add back depreciation. That's why they give you the amount. Okay. During the year, the company purchased plant assets costing that much and pay that much, and the rest will be long-term, no payable. 2021, this company borrowed 1,450,000, again 5.5 million line of credit. Basically, they just borrow the money from the bank, okay? And then additional shares, common capital stock, no bar value was issued to investor for 500,000 cash. So they ask you prepare a worksheet of for statement of cash flow, and then B is the cash flow by indirect method. Okay, so we do the easy one first. So as you see here, I look at that's it 2020, that's it 2021. You see here total assets. Year 2020 only 780. However, you see that very almost like 5 times, almost 5 times, triple 5 times. I mean bigger. Okay. So what they asked me to do is just so why don't you just move under here and you look at the statement. So you see here they tell you that statement of cash flow year end 31st December 2021. So they try to tell you that, okay, I have the beginning balance, I have some changes, increase and decrease, and then this is my ending balance. Okay, they already give you 2 years. Okay, so for example, cash 2020 is 80,000. 2021 is 30,000. Increase or decrease, everyone? Everyone?
Decrease.
Decrease, right? Decrease how much? Decrease 43, right?
Yep.
Yeah, 43. So you should show the change into here. You see here, debit change or credit change, because cash come from 80 become only 37. It's a decrease of cash, right? Cash is an asset, so whenever it's decrease, you should do a credit changes. Everyone here okay? It's just the same way when we do journal entry. Cash increase, debit, cash decrease, credit. Okay, so it just work the same way that we do during the adjustment entry. So first stop, what you need to do is enter the amount on the column 2020 first into the beginning balance. Okay, so one by one, cash 80,000, account receivable 100,000, plant and equipment 600,000. So that print me up to 780. I have 780. Good. Next one, liability and stock owner equity. I don't have no payable on 2020, so it's blank, okay? And then you need to add account payable 30,000, accrual 45. So you just basically enter 30,000, 45,000. $390. Yeah, $390. 200. And then retainer in 115. Okay, so I look at, okay, my assets equal to my liability and equity. That's okay. That's my first start. Then you need to figure it out what it changed, what it credit, what it debit changes. So one by one you do it. Cash decrease, right? Decrease by 43,000. So my ending will be 37. Okay. The next one, account receivable, used to be 100,000 in the past. Now it's become 850. Increase, right, everyone? Assets increase, credit. Okay. I'm sorry, debit 750. So basically, this one just practice, help you to practice in terms of credit changes or debit changes, because they already give you the amount. Similar way, 600 jump into 653.
Debit and credit both.
But hold on.
I think it should be debit and credit both, right?
Yeah, that's true.
Because we have to account for depreciation.
Net of accumulated depreciation. Let me see. For purchased.
Number 3.
To 653, if I should. Okay. So where is it? Plan and so 600,000. So you got 2653. If you see here, 2653, right? That's the number you have 2021. However, they purchased of Hold on. Don't
So
do
I
that.
think they
Don't do
purchased
that. So you
two
take, yeah, go ahead. Rehad, right, Rehad?
Yeah. So I think they purchased like 2.2 million worth of plant and asset, and that should be debited, and
And
the depreciation at
part.
number 2 is 147,000. That should be credited,
Yeah,
just
so-
like at the balance sheet.
Correct. Yep, exactly. So you can, I just want to show the difference first, and then we go into detail. So if you take, if you do subtraction abnormal, you will see the change will be um, 20. Right? That's the change. However, when they bought it with 22 million. I mean, 2 million. So if I subtract that, okay, my bad, sorry. So what you can do here is that during the year they purchased this amount in, right? So that's increase will be debit 220011 and 00. However, because you know the change should be 2053, so you take 2200 minus 2053 here. So the difference will be,
I think it's given number 2, depreciation.
147. Yeah, the depreciation increase. That, yep. So that will give you a balance of 2653. So assume basically the net changes come from 2 elements. One is when you buy a new asset, and when you buy assets during the year, you also depreciate it. Okay, so that's why my assets increase debit at the same time. My accumulated depreciation or my depreciation increase. That's why I credit. So that will be your assets portion. So you will do the same way with account payable, okay? Account payable, I'm sorry, note payable first. Note payable increased by 1,450. And because it's a liability, whenever it's increased will be credit. So your last year is 0, this year's increase, the total will be the same. Okay. Next year, account payable, you do the same. You increase from 30 into 63, so increase by 33,000. So you have 63. What? Uh-oh. Okay. Similarly with accrual, it's decreased in this case, so that will be 13,000. No payable increase 740, 350. Make it. The next one, capital stock, jump 500,000. I just keep saying wrong one amount. Retained income from 115 jump into 555, so 440. So after that, after I enter all of these, I make sure that my ending balance of assets equal to the total of liability and equity. That's the check. Okay. So that's A. Any question, everyone? No one?
No question.
Okay. The hardest part will be the indirect cash flow. Okay. So if you remember when we indirect, for the indirect method, the first stop you will start will be start from your net income. Okay. Net income. You can click on ebooks or references so that it show you ebooks. The indirect summary, okay? Because for sure that we cannot remember all of the type of adjustment. See here, indirect method, a summary, net income, and then you add depreciation, add decrease in account receivable, and so forth. So we'll go back. So whenever you do, can open ebooks at reference. So my starting point is my net income. My net income, they give you 404,000. Okay. Again, under indirect, you still have three elements. You have operating from activity, from investing, and from financing. However, operating you will do the backward, starting from net income and then add back the adjustment, add or subtract whatever adjustment is. So you look for depreciation. Depreciation considered as non-cash because when you depreciate an asset, you don't take the cash from your raw to pay someone, right? So basically you just calculate it, but without cash involvement. That's why, however, the net income during your calculation, you already subtract the net, subtract the depreciation expense from your net income. That's why you have to add it back when you want to calculate the cash flow. Okay, so you may ask why you add back depreciation, or why we have to add back depreciation, because net income already subtract that out in its calculation, and because it doesn't have cash involved, you have to add it back. So I will add back how much? 147. That's your first step. The next one is increase in account payable. Increase in account payable. So if you remember here, the changes of account payable is 33,000. So that's That's why they ask you to calculate on question A. So you will ask, why do I need to add back? Why do I need to add the increase in account payable? So again, cash flow, you just take care about, you just calculate how much your cash come in and how much your cash come out, okay? So when you go to someone to buy the supply, let's say year one, you buy $100. Year two, okay, year two you buy, but you don't pay yet, you promise to pay 200. That means you owe the people, right? You owe the supplier, and your cash didn't come out from your drawer yet, from your bank yet, right? Your cash still stay with you. So that's why they add it back on the cash flow statement. And it's the opposite way. If a decrease in account payable, that means you take the money from your raw to pay for the supply. In that case, in the decrease, it will be a deduction. Okay. So this will be your operating cash operation. I'm sorry, cash provided by operating activity. Cash come in. Deduction. In terms of deduction, you have to deal with the increase on account receivable. Because when account receivable increase, that means you sell your products on credit, right? You don't get cash in. The client will owe you. That's why you have to subtract that amount out. Account receivable changes 750. Again, deduction. So the next one will be decrease in accrue expense payable. The reason why accrue expense payable. So when you accrue expense, mean that you that expense you don't take the money to pay yet. Okay. So when if it's decreased, that means you have more cash in your hands. I'm sorry, you had less cash in your hand. So 13,000 right here, accrue expense payable. So cash used for operating activity, cash come out from operating activity will be 763. Comes in 620, come out 763. That's the net of net cash used in operating activity. Yeah. So that's operating activity. Then you have to move with cash flow from investing and then financing. For investing will be easier in terms of, okay, investing, you basically you bought a new plan assets, okay, and you pay them 1,850. So that's the amount that you pay by cash. That's your cash comes out. Although the machine is 22, however, you only pay 1,850 in cash. The rest you pay by no payable. So the amount that you need to enter in the 1,850 instead. So 18 cash paid to acquire plan. Okay, so that's the only item that you get in of your investing activity. So it will be cash use because a negative. The last part will be financing. So financing will be something like common stock, principal payment, dividend pay. Okay. So if you look at here, in 2021, the company borrowed 1,450,000 from the bank, and it is a short term, no payable. So I will enter that here. Short-term borrowing from bank. Because you borrow, you had cash come in, right? So 1450. You also have a transaction of capital stock worth issue for 500 cash. So you have to factor that into. You issue stock, you get cash in, that's why it will be positive. That's all. They say that no dividend pay, so you don't have to worry. So that will be because all of them are cash inflow. So I will click on net provided. So I have net cash from operating, from investing, and from financing. Financing here. So if they already calculate a total for you, but minus 43,000, that is the cash, the net cash flow. And because it's negative, that means it net decrease in cash. Okay. So now you need to enter a couple more items. Cash and cash equivalent January 1st, 2021. Right here, 37,000, right? So you enter that in. No, hold on. Cash and cash equivalent. I'm sorry, 20. They say what? January 1st, 2021. So basically it will be December 31st, 2020. So 80,000. So you're beginning 80,000, the change minus 43, you're ending 37. Okay, so if you take a quick look here, after we do on transaction, your cash and cash equivalent is 37, which match with your 2021 cash amount. So you know that, okay, you do okay because you didn't miss anything. If these two numbers not matching, that means you missed something. Supplementary schedule, non-cash, investing and financing activity. Click on it here. supplementary schedule, non-cash investing and financing. So they want to enter some activity here related to non-cash investing. So non-cash investing will be you buy planned assets, the cash paid to acquire assets. So you pay them, the total cost is 2,200,000. However, you issue a bond, a note payable of 350. Okay, 350. So you see that you already paid them by cash in the amount of 1,850,000. Cash paid to acquire land assets. Okay, so that will be your indirect method of cash flow statement.
Can you please check to see if it's complete?
Okay, let me check my work. It look okay.
Okay, then I'm missing something.
Maybe the title should be. Look back, look at the title again.
I think you didn't add the net decrease in cash.
Net increase in cash.
Net decrease in cash.
Net decrease in
The
cash.
other one required B.
Require B. We did. I did.
No.
Oh, you mean? Did you add that, or maybe you missed one of the activity ending total?
Oh, I see what I missed. The very last one.
Okay. Anyone else? Everyone? So that will be the total. So for now, you will have all of the projects done, and you should have a on the score of you should get from Connect. Anyone else have question, or anyone else need me to go back one of the question that you may need to revisit? So far, our class do very well. I mean, most of you have a B plus up total score in general, except some of the folks very behind. There is no. So on Friday, I will correct capstone 2. I'm sorry, capstone 3. Capstone 3 only 2 worksheet and very short, so it will not take as long as capstone 1 or capstone 2. So that will taken care of your assignment. Then we have the quiz 3 after you return from Thanksgiving. And I will give you an extra credit assignment very shortly, so that you get 10% extra to cover on your either your quiz or your project that you cannot get as high score as you want. Any question, everyone?
No, thank you.
Okay. Again, if you see any discrepancy between your score on Connect with Moodle, just email me and I will update it. Somehow, I don't know what the reason, but the scorecard that I get from Connect, some are missing from your end. You see on your end, but I cannot see from it. I just wonder, is it because that some of you submit on time for sure, but it didn't show on my end. So that's why I hit last week when I entered the score, I would hit F if I don't see the score from the Connect. Then just stick around and we and you see the link that I sent you on for Friday class, right, everyone?
Yes.
Okay, so make sure on Friday log that in. Yeah, I will answer now so that you should be okay. So everyone just stick around and we'll finish at 10, okay? Hello, Tiago. Tiago. Mẹ để không được, mẹ mẹ ơi đã đợi đó. Mẹ ơi. Okay, everyone. So good night. Okay, and I will see you on Friday. For everyone, for anyone not able to come. Okay.
Okay, good night.
Okay. Good night.